In this case, we're looking at a trust and how to handle trust distributions. So we've got a very simple scenario from a revenue and expense perspective for June 2019. We've got $100,000 in revenue, no expenses. So this $100,000 needs to be distributed and shared. In this case, there is no opening balance. So this is actually year one. You can see down here on the balance sheet, the year ended with $100,000 in the bank account, $10 on hand in cash, and we have the beneficiary, in this case Anna Doe. Anna Doe started the year with no balance and introduced $50,000 worth of capital to kickstart the business. She then took drawings, and you can see the drawings with the minus sign. She took drawings during the year of $50,000, and the profit of the business was $100,000. So we've got a closing balance essentially of $100,000, and that ties in over there. That $100,000 then becomes the opening balance for 2020, and in 2020 we've got profits of $200,000. So all of the profits in this case will go to this single beneficiary, Anna Doe, and Anna also takes out $200,000 worth of drawings, or you could call that maintenance or whatever's paid for the benefit of the beneficiary. She also has no need to put any more capital in, and therefore we end the year with the same balance, $100,000 opening balance. There's no need in this case to reflect the opening balance explicitly here. We can see it there. So 100 plus 200 minus 200 is 100. And there we are, back to 100 there. So now let's have a look and see how that looks when we run it through Logit. Let's import that file. So balance sheet, beneficiary loan, we'll check the classification. So notice that the beneficiary loan simply reflects the closing balance, right? We've got our revenue, we've got our equity, settled sum, revenue and no expenses, and asset, bank account. Cash at hand needs to be fixed. Cash, so it's a cash float or petty cash, your choice. And if we now go to relationships, let's add in Anna Doe as a beneficiary. So she's not beneficiary of, she is a beneficiary. Beneficiary of is the inverse relationship. So if you had a look at Anna Doe, and if you had a look through at her relationships, you would see that she is beneficiary of this trust. So we obviously use her for a number of demonstrations, and we would have to find that the trust, which we've just added her as a beneficiary, is somewhere in this list. Trustee of, okay, beneficiary of, right, here we go. So this is the Logit test trust that we're working on, and here you can see she's the beneficiary of. So we're back here now, we've established the beneficiary. We can now go to our custom reports, and we can add in, it's a trading entity for 2020, and create that. So we've now got to split out the profit, which is pretty easy. And right, profit's all split. If there were multiple beneficiaries, you simply split it out manually like this. And we know that we want to reflect this view. So we've got to put in our drawings and our capital introduced. We've put in our profit. And we first set the closing balance. Now note here that we've only got that one line item in the accounts, right? And therefore that one line item, that is essentially closing balances. So we'll now put in these values. We know that we had 50,000 worth of drawings and 50,000 worth of capital introduced. So you can see our zero opening balance, and that's reflective of the fact that this is year one for this trust. If there had been an opening balance, then you'd have to resolve what that would be, and that would probably be something like this. Okay, where you'd figure that there was either a positive or negative opening balance. But anyway, for this year, that's the scenario. For the following year, we want $100,000 to flow across as the opening balance, right? That's a derived value based on what we're now going to put in here. So I think the drawings were 200,000, and there you go. There's your 100,000 flowing across, and we've got a full accurate report where this is all now matching what we'd have on our balance sheet. 100 and 100 and 100 and 100, because it's all closing balance based.